spotlight on the auto sector then, and in a deal that is poised to reshape the global commercial vehicle industry, Tata Motors has announced its deal to acquire Italy's Iveco group for nearly 3.8 billion euros in an all-cash transaction, creating a formidable global player with vast reach. In fact, we have the management speaking. Let's go across and listen in.
First one being trucks, the largest contributor to the top line, around 10 billion revenue for calendar year 24 with an EBIT margin of 5.6%. And they have around 11% market share in European Union and Latin America, with key manufacturing locations being Italy, Spain, and Brazil. In buses, the revenue for last year was around 2.6 billion with an EBIT of around 5.5%. They are number 2 bus manufacturer in Europe and operate in city, intercity, and minibus, all the segments, with manufacturing locations in Czechoslovakia and France. Coming to FPT, which is the powertrain business, calendar year 24 revenue of 3.5 billion euros with an EBIT of around 6.2%. They are the 5th largest engine manufacturer globally, with most of the manufacturing facilities in Italy. They also have a financial services arm called as Iveco Capital, which is essentially for funding the channel, as also retail funding in joint venture with companies like Santander and BNP Paribas. If you look at the geographical footprint, around 75% of their revenue comes from Europe, around 12% from South America, and 12% from rest of the world, with a small presence of 1% in North America. They have a very wide product range across all the segments. And very quickly to take you through the context, post demerger and spin-off from CNH Global, I think the company has been doing very well, improving their EBIT margins year on year. They also had a capital market day last year in March, wherein they have come out clearly with a clear strategy and way forward for each of their businesses and aspirational targets for growth in trucks, buses, powertrain, as well as financial services. In a nutshell, they are going to grow at around 5% compounded annual growth rate to deliver a 17.5 billion euro business with 7 to 7.5% EBIT, which is around 200 bips improvement over what they've achieved last year, and with a free cash flow of around 0.75 to 0.8 billion euros by calendar year 28. They are looking at essentially improving the market position on the back of a strong product portfolio, which is there.
Okay, so that's the word coming in from the management of Tata Motors on the back of that big acquisition that they announced yesterday.